Hi, this is Mac with PriceActionTradingSystem.com, and I'm going to demonstrate a trade for you today. And you can see I've got my order in. I've got it one tick below the signal bar, and we've got a two-legged pullback to the EMA and a trend line both. And if prices tick below the signal bar, you see the trend line right here, and you can see that prices did tick above that trend line slightly on this bar, but there's nothing but stem up there, so that's a good sign. We also got a little double top there, and but the reason we're entering here is a two-legged pullback to the EMA and a two-legged pullback to the trend line both, because the trend line's coming down right along the EMA. And normally, like I said, I wouldn't necessarily like going short even on a second entry below a bar that has that much of a bullish body to it. But because we have the trend line here, I like the trade. Anytime you get a two-legged pullback to the trend line and that trend line holds prices, that's generally a great place to enter. And you can see right here that that's the case. And it is a second entry. We had a new low, a pullback, and then a run to a second leg up to the trend line. Here's our signal bar. One tick below it is our trigger. So we got our order sitting there one tick below it, and we're just waiting on prices to tick through. And there we go. The trade was executed. We're short now. We went in with 3 contracts. We're going to try to scalp out on 2 of them. We're going to get 1 point on 2 of them. We're going to attempt to get 1 point on 2 of them. And then we're going to we'll manage our runner based on how prices look and how things set up after we exit this trade. Let's move our stop down to 1 tick above the signal bar. Generally, I like my stop to be 2 points, not any more than that. Occasionally, if the bar's a little bigger, getting a point above it maybe give you 8 to 10 ticks. And I do that quite often because that's the safest place to ensure that you don't get stopped out early, is to have your stop above the signal bar, the high swing. And if the high swing or signal bar is much more than 2 points, then that may be a good enough reason not to take the trade. But in this case, I like this setup. As you can see, prices are already bouncing off our exit order here. Let's see if we can get filled. Prices will. Okay, we did get filled. We moved our stop to break even +1. I'm just going to leave it there. And let's see if we can, and we're already stopped out. So that was pretty quick. I hate to get stopped out that quick. That's the way it works sometimes. And you just have to live with what you got. And we got stopped out there. I'm going to skip ahead here. I didn't want to wait through all that price action to kind of show you how this ended up. But by the time we got stopped out on this bar right here. And as you can see, by that time there were a lot of overlapping bars here. It's late in the day, and you could see prices once we started to have all that overlap, even if we hadn't got stopped out right there, I probably would have exited the next time prices came to down. And we do have a fairly convincing break of the trend line now right here. We came down to a new low. Usually you'll get 2 legs down to a new low, and then prices will try to reverse. But this is more of a trading range really than a trend. But you can see this trend line was in play. We had it off the first 2 swings of the high, and it turned prices there, and then it turned prices right here. And that was the reason I like that short. There's your 2 swings back to the EMA and the trend line. So when prices broke below there, that triggered our trade. We got an easy 1 point item. You can see how we didn't get much more than that at all. We basically got our 4 tick scalp, and prices have not really gone a whole lot lower. This was a pretty good setup here. We had a pretty good move down right here, and we did make a new low right here. Now prices are rallying, but you can see that prices never really took off. So on a day like this, you might have even considered scalping out on all 3 contracts, and instead of making basically a little over $100, you would have made $150. And so that's, again, you can manage your trade however you like, whatever suits you or your interest or your trading your trading personality is really what I'm trying to say there. And everybody's personality is different. And you've heard me talk about this many times. Some people are just, their nature, their makeup, they're better off as scalpers, and others are better off as swing traders. And I think if you really look closely at the paper that I sent out by Ivan today, you will see that the odds are really stacked more in your favor as a scalper. And I think that's why there are so many scalpers out there in the ES every day. And you see this market's rallying here. It's reversing. We've got the trend line breaking a new low, and it's trying to reverse and rally up out of here. Now, whether or not it can get above any of this previous highs, that's yet to be seen. But that's a good failed break lower right there that's trying to reverse and turn into possibly a run back up to the high of the range, or maybe even a trend to the close today. So, but anyway, today was very similar to yesterday. You can see, I'll back out here, you can see the trailing range with most of the price action, most of the resistance being around 1219 to 1220 area, and most of your support being down here around the 1212 area, right across this area right here. And we did break below that earlier this late this morning rather, and but when we rallied back up, we just couldn't get above this resistance area, and prices have been selling off again. And that's something, I know I've talked about this before, but we got a couple of extra minutes. I'll just touch on this again. But this is really what prices do. They test important support and resistance areas. And if those areas hold, they will reverse and go test the next area. Or if they break through, they go on down and test the next area. And just let me show you here. Prices were coming down. This was a resistance area. It's now turned into support. They tested that. They attempted to go higher and couldn't, and they broke on through, and they came on down, and now they're testing the next support area right in here. They're testing right here, and they couldn't. Prices never mustered up anything. They broke through, and they just kept going lower. And eventually we found some support here. We tested this area right across here. We found support. Prices pulled back, tested it again, and it held twice. And then prices rallied, and we started going higher. We tested that resistance area. We got through it. We went to the next one. But once we got here, we pulled back. We tested it a couple more times and couldn't get any higher. So then what happens? The market sells off. We come down here. We test this low. It kind of holds. Prices go back and test this resistance again. So that's what prices do. They search. They continue to move in one direction until they find support or resistance that holds, and once that holds, then it reverses the move, and then the prices go back. And if you went to a bigger chart, you could see these bigger points, which will probably be these extremes. And if you look back over weeks or days, you may see we tested that here early this morning or yesterday afternoon in the overnight, and we tested it again right here. It held both times. And both times the market rallied back up. And, will we go higher from here? Will this be a higher low when we go higher? I don't know, but we will continue. But that's just what prices do. And that's really all price action is about, is learning to follow the movements and understanding when it's reversing. And usually what it's going to do, it's going to test an area a couple of times. Remember our rule that anytime the market attempts something twice and fails, it's probably going to succeed in going the other way. At least succeed until it finds, an area in the other direction that it tests twice and can't go any further. And then eventually one of those support or resistance areas will give on you, and then prices move on. So learn to watch the price action. Be thinking of that. Watch for these support areas in advance. When prices bounced here twice earlier, we should have expected that prices were going to try to bounce there next time. You see what happened. Bounced there, we broke through, but we still couldn't really go lower, and we tried it a couple of times, and then prices rallied. And then we got up here, and we tested this area a couple of times, couldn't get any higher, and prices sold off. This time you see, before we got through this area, we tested it here and here, and it couldn't get through, but we couldn't get back above the EMA either. So then we had resistance that was stronger right here than the support right here, so prices go on down. So learn to think ahead. Look where your strong support and resistance areas are. Think of them as target areas, and know that prices are going to do something when we get there. Even if they're only going to hesitate, you're probably going to get a reaction there because there's people, because that's what the smart traders are doing. They're watching those areas. And I can tell you without any doubt, there's a lot of traders that got short right here for the sole reason that prices had turned here twice before. And they probably just had orders sitting there waiting on, and even though that prices were rallying hard up, and look how hard they were rallying up in right there. And I guarantee you there were still orders sitting there, just naked orders sitting out there, people knowing that there's a good chance that prices will turn down. And look at there, they turned down, and there's 4 or 5 points in that move right there. If you're sitting there with 10 contracts and you get 4 points out of that, which that was easy to do, then you just made yourself 40 points. Just sailing naked out there with no other reason than knowing that there was resistance across there. And don't think they didn't sell it again right here, and that's the same thing. Of course, we didn't get as big a sell-off, but if you just had naked orders sitting right there, knowing that something was going to happen when prices got there, there were still several points in there to make money, and you can see that big bearish bar there. And even though prices couldn't go lower, we worked on through this time. But then the next area was up here, and again we found resistance. And then when we were coming down, like right here, this was the support this morning. We found it again right here. We tested it again. It was higher, so then the prices start heading up. And so just understand and know that that's how the market works. It's always searching out support and resistance, and it either finds it and it holds, or it finds it and it gives, and prices continue on. But I'm going to call it a day. This is going to serve as our chart lesson for today and our trade example all together. And I hope you had a good week. I hope you have a great weekend. Next week will be a holiday weekend here week in the U.S. It'll be a shortened week. We will probably trade here on Monday and Tuesday and then close shop for the rest of the week. So we'll most likely have some kind of lesson on Monday and Tuesday of next week. But other than that, that'll probably be it for the week, and we'll probably close up for the rest of the week and enjoy the time with our family here in the U.S. during the Thanksgiving holiday. But this is Mac with PriceActionTradingSystem.com. Thanks for watching, and we'll see you next week.